All right. Matt, the mortgage guy. In today's video, I'm going to talk to you about mortgage rates going up. They've gone up quite a bit. I'll get into the specifics. More specifically, I want to talk to you about how that's going to affect you as a home buyer in 2022. Does it mean you can't buy? Does it mean your purchase power is decreased by 8 to 10%? Does it mean that the sky is falling and home prices are going to crash? From a mortgage broker's perspective, someone who talks to people all day, every day, consumers, real estate agents, other mortgage professionals, I'm going to tell you my honest, as unbiased as I can be opinion, because I know people are going to point at the fact that I make a living, brokering mortgages. But truly, if you know me and you know this channel, I'm going to give you honest advice. It's going to be somewhere in between the sky is falling, the market is crashing, and nothing's going on here. Whistle while you work. Real estate market will continue to increase by 15% every year. Somewhere in the middle lies the truth and reality, right? So before I jump into it, please consider like, comment, subscribe, share this with someone who you might think might benefit. All right, let's jump into it. So I'm going to give you specifics in this video, and I'm going to show you exactly what it looked like a month ago, what it looked like back in August, how it relates to today, how it affects your mortgage payment, how that affects your purchasing power with real numbers, right? I'm not just going to talk about, high level stuff and get into really fancy talk about it, right? I want to tell you, if you're buying, if your rate was 3%, here's what your payment was. Now that it's at 3.75% for some buyers, here's what it's going to look like now. So let's start with what the 30-year fixed rate mortgage has done over the past year, and more specifically over the past 4 months or 4 weeks, right? If we go back 4 or 5 months ago to August, let me move myself down here. There you are, buddy. Stay there. Back when I had a birthday here, 41st, back in early August, 2.8%. I think there was a 2.78. There you go, 2.78 on August 3rd. And this is a survey, right? This is Mortgage News Daily. They do a survey, 30-year fixed. So it's about the average interest rate, right? Might have been lower for certain scenarios, might have been higher at certain lenders, but nonetheless, here's your average, right? 2.78 in early August, all the way to, this week, January 18th, 2022, 3.7. Almost a full point in interest rate change, right? So this is huge. Even from the end of the year, the last day of the year, 3.27 to 3.7, quite a jump, right? Almost a 0.5% in really the last 3 weeks, right? Rates have gone up, and they've gone up faster than anyone would have predicted. All throughout here, I was saying rates are going to increase. Most mortgage folks were saying, based on everything the Fed is talking about, mortgage rates are going to increase in the future. In 2022, we'll probably see 3.5 to 3.75. A lot of this talk was going on. And I'll be the first to admit, I didn't predict they'd go up this much, this fast. Most people didn't. Most people said, hey, by the middle of the year, mid threes. By the end of the year, maybe 3.75. Here we are, literally 3 weeks into 2022, and we've got rates at 3.75. Nobody predicted the market would have this reaction, right? But the more the Fed talks, the more the Fed tapers, the more they talk about, what they're going to do with the Fed funds rate in March and April, the more this thing seems to tick up. So here's what I want to show you, because I think this is going to be valuable for people more than just seeing charts and just looking at, okay, rates went up, right? What is it going to do to you specifically from a mortgage payment perspective? And this is the kind of stuff I share with clients. This stuff I feel like is don't tell me, show me. I want to see the numbers type of data, where over here, a January 2022 with rates at 3.75, and I'm being conservative. Some people can still get a 3.5 or a 3.625. If your credit's not perfect or you don't want to pay any points, it might be up at 3.75. Again, it depends on the lender you're using as well. Let's just use that as a number. Today versus when you might have seen a 3%, right? Early December of 2021. it's about $150 difference on your payment. Now, that's a 7.5% increase on your mortgage payment, roughly 7.5%, 8%. And that's no small thing, right? I understand that. But here's what I'm at least seeing in my business and the conversations I'm having. Most people who are entering the market as buyers are not entering and saying, what's the very max I can qualify for? And they're maxed at 400,000 and then going out and, this 2,045 is their absolute max payment. They've identified they'd like a payment between 2,000 and 2,200. 400,000 is a house that they can see themselves living in for the next 5 to 7 years. And, it's a comfortable payment that fits within their budget, right? If it goes from 2,045 to 2,195, is it not cool? Does it suck that it went up $150? Yeah. But is it going to deter them from buying? Most people, no. Right. And so that's just a little stat to show you. You might be paying more in your market. You might be paying less. We could do this at 300,000 and see what that looks like. 10% down. I also had on this chart 15% terms just because some people were interested in that, but I think I'll save that for another video. 1534 to 1646, the payment would go up if it was a $300,000 purchase with 10% down. Payment goes up $112, right? What a lot of people want to see is, hey, if I was buying something at 300 and my payment of 1534 was what I could afford and what I budgeted for, what's my new purchasing power with that same payment? I'll take a guess and say maybe it's 275. It's even more than that, I guess. 280 looks like 280 is about the same payment, 1536 to 1534. So, rates went up 3/4, sucks. A $300,000 purchase now equates to a 280. Does this mean, like some people are going to say, that we're going to see a 10% reduction in home prices? I personally don't think so. I think the supply-demand imbalance is enough that if demand is quelled from higher interest rates, there's still enough to keep home prices probably cooling from where they're at 10, 12, 15% home price appreciation to 3%, 5%, which would be healthy, right? But I don't see it going -10. I certainly don't see it going, -20 when it comes to home price appreciation. So that's just my personal opinion. If rates go to 4%, it's very similar, in my opinion, that it's going to cool down the rate of home price appreciation, but it's going to cool it down to 0, to flat, to 3%, to 5%. It's not going to cool it down so much that we're going to be going backwards and we're going to see price depreciation. Honestly, it would be welcomed. I just don't see it, right? One quick thing I also wanted to show, besides this article that CNBC put out today, where they're, just showing that, mortgage rates are up almost 1% in this short period of time. And this is an interesting point here that they made, is lenders are compressing their margins to compete in a raising rate environment. So rates would be even higher if it wasn't for like stiff competition for mortgage. Let's keep in mind that the people who can benefit from a rate and term refinance went from everybody to literally nobody. 75% of people who have a 30-year fixed conventional mortgage are in such great rates that they have no benefit to refinance. There's a pool of buyers that maybe have a higher interest rate but aren't eligible to refinance. So the very few that really are left to refinance, the only refinances, I shouldn't say only, many refinances that still make sense are going to be cash out refinances where there's debt consolidation or other investments going on. The rate and term, meaning no cash out, refinance has dried up in a hurry. Predictions where it would be 62% lower in 2022. I think with how quick rates increased, we might see a 75%, 80% drop off in refinance origination. But plenty of folks looking to buy a home. Plenty of folks know that sub 4%, even if it gets to 4.25%, great interest rate with a 30-year fixed, buying an asset like real estate that's going to appreciate over time. If it doesn't appreciate this year and it doesn't appreciate next year, rest assured in 2045, the house is worth more than it is today. I can promise you that. So in closing, I want to show you this because I think it's a really cool tool. First, I'll touch on this article from Redfin that talked about if rates went above 3.5, what would that do to buyer sentiment? What would it do to urgency to buy? Really interesting because this article was from about 2 weeks ago on January 7th saying if rates went above 3.5%, buyers would feel more urgency to buy a house. Well, here we are. We're in the future from this article on January 7th, and rates are above 3.5%. We'll see if half of the buyers have more urgency to buy. My advice to you, if you're a buyer, don't have more urgency. There's not a lot of inventory out there. There's not a lot of great stuff. Don't rush out and buy anything just to say, I locked in 3.7. I locked in 3.6. I didn't want rates to go to 4.5. So I bought something that I didn't necessarily like, or I overpaid for something drastically because I really wanted to get into a house. More inventory will come eventually. I believe that rates will probably settle between 3.75 and 4%, and we're probably going to have a fairly long 2, 3, 6 month run that stays within a range of 3.75 to 4%. The likelihood that we see another run like we've just seen, where we go up 0.5, 0.75% in such a short period of time, is very unlikely. So don't slow search and wait for a drop. A drop ain't coming. What I would do is just continue to look, continue to know what your budget is and how much you want to buy and what type of monthly payment you can afford. You might even want to talk to your loan officer and say, hey, I'm looking at things and I know exactly what it's going to cost me to buy a $500,000 house with 10% down at a 3.7 interest rate. Will you show me 4%? And I'll just search based on 4%. If rates go to 4, no surprise. If rates stay at 3.7, it will be good news, right? That would be probably a good thing to do as a buyer. So lastly, I want to share this with folks because it's really cool. I'll link this in the description. This how much can you afford as mortgage rates change is a really cool tool by Redfin. I told you they're smart. I told you they got cool technology. Over here are the payments. So you go to $2,500 payment. This is what I want to buy. You can go up to this orange line and say, if it was 3% interest rate, I could have bought something for $517,500 and had a $2,500 payment. Go down here to 3,625, where you might be qualified at today. 365, 488,500 is the purchase price. Keep in mind, this is assuming 20% down, 1.25 property tax. This 1.25 property tax, that's accurate for California. It may not be accurate where you're at. You may be putting less than 20% down, which, truth be told, I don't know why these automated calculators and things like this still use 20%. It's, more and more people, 3%, 5%, 10% down, but that's another story for another video. Hopefully this was helpful. Got a little long-winded, but I think the moral of the story is the sky is not falling. Mortgage rates are higher. Your payment's going to be a little bit higher. Take this information, do with it what you will. I think you just adjust the game plan. You make yourself educated on where current rates are. If you're looking to buy a house in 2022, historically, you still have a great interest rate. It's a 30-year fixed. You know what you're getting into. If you like the home, you can afford the payment. You're going to get into a 30-year fixed. You're going to be in a good position. If it's a long-term buy and it's an owner-occupied residence, or even if it's a long-term rental, you know what the payment's going to be, whether it goes down 3% next year or up 6% or whatnot. In the long term, it's going to appreciate. That's what real estate does over the long term. In the short term, it may go up, it may go down. You might see 10% down, you might see 14% up. That's the nature of it, right? And so if it's a long-term investment, don't let 3/4 of interest rate hike scare you away. All right, I've talked long enough. That's it. If we can help you in any way, please reach out, greatmortgagebroker.com. And until next time, we gonna see.